Hello, everyone, and welcome today to our webinar with our partner, Avalara. Today, we'll be talking about the topic preparing for the 2025 tax changes, tariffs, and trade. So today, we want to kick off and just meet our three presenters on the Avalara team. So our presenters are Mary Cho, and she's the tax director for Avalara, Rob Hebrank, the product sales specialist there, and Jesse Lewter, the strategic alliance manager. And one quick reminder as we kick things off, if you have any questions, feel free to enter them in the Q&A portion of the webinar or in the chat as well, and we'll try our best to answer those at the end of the webinar. From there, Mary, I'll let you take it from here.
Thanks, Sandy. So we're going to start with the safe harbor statement. This information is Avalara's confidential information. Materials are solely for the use in this context and are not approved for further distribution. This document describes Avalara's intentions as of the date of drafting and may include descriptions of products, functionality, or technology that are not currently available. Avalara reserves the right to change the functionality, release dates, technology, initiatives, and plans described herein without notice or duty to update. So today's agenda, we're going to go over the 2025 tax trends for manufacturers. We're going to start on sales tax nexus, voluntary disclosure programs, audit triggers and best practices, consequences of non-compliance, tariffs compliance, why Avalara, and then open it up for Q&A. So now I want to transition the next slide to Jesse.
Awesome. Thank you, Mary. And so we're going to touch real quick on a few of the 2025 tax changes specific to manufacturing. So as legislation seems to always be changing, it's really important to make sure that your businesses stay aware. So what we've done is we've rounded up some of the tax trends impacting the manufacturing industry this year. And this slide shows some of those key stats, and I'll call out a few of those. One, the global smart manufacturing market was valued at just $293 million a couple of years ago, and is expected to rise to $1.2 trillion by 2033, making a huge jump. And then 14 states broadly exempt tangible personal property from property taxes, and 10 states plus DC offer de minimis exemption for taxable property. That's a mouthful. And the stat that is most applicable to you as manufacturers is 40 states plus Puerto Rico and DC include exempt sales in their economic nexus thresholds, which segues us perfectly to our next section on sales tax nexus, and I'll hand it back over to Mary.
Thanks, Jesse. So sales tax nexus. The underlying foundation of sales tax boils down to whether the seller has nexus in a jurisdiction. Nexus is defined as some level of connection between the seller and the taxing jurisdiction. The term connection is broadly defined and will be covered in the next couple of slides. So if you're looking to find out whether the company has nexus, this webinar is for you. If a seller does not have nexus in the state cannot impose their tax laws against the seller, including registration and tax collection. If the seller does have nexus in the state, we can talk about ways to identify and mitigate some of the tax and penalties. So in this slide, it shows all the different types of nexus are listed. And each nexus is analyzed on its own individually, meaning you do not combine physical and economic nexus under the same analysis. Too often I have customers that say, well, I may have an employee in the state, but I did not exceed the economic nexus threshold, so I don't have nexus. That is not correct, unfortunately. The moment that you hire that employee, you have nexus, but you may not have economic nexus. So with physical nexus, what that implies is just the name of itself, right? You're physically in the state, whether it be permanent or temporary. Having employees certainly create nexus, as well as having independent contractors, agents, 1099s who are acting on behalf of the seller in selling and performing services, such as soliciting, selling, or they can provide like install, warranty work. That all creates physical nexus for the seller. Also having inventory in the state, even though it's stored in a warehouse that is run or fulfilled by a third party, that does create physical nexus for the seller. Also travel into the state, participating in trade shows. Now, trade shows have some de minimis rules in certain states that, certain activities such as certain amount of days or certain amount of times in a year that may or may not trigger nexus. Physical nexus depends on the jurisdiction. With economic nexus, this is the South Dakota versus Wayfair case back in June of 2018. This looks at economic nexus activities such as revenue and or the number of transactions in the state at a given point in time. Every state has imposed a sales tax, has economic nexus laws. The challenge is that every state has different thresholds and what types of revenue is counted towards the threshold. So meaning is exempt sales such as sales for resale or marketplace sales, are they included in the threshold? Well, it depends. So to give you an example, I'm in Washington state. Washington says it doesn't matter whether it's taxable or not. Everything, all revenue is counted towards the $100,000 threshold. Whereas in Florida, it's the opposite. They only look at taxable tangible personal property. So exempt or taxable services, sales made through the marketplace, sales that are for resale, they are not counted towards the threshold. With click-through nexus, this is where the seller provides an incentive or a referral fee, or sometimes called a commission, to partners or influencers when they drive traffic to the seller's website. This creates nexus. Also, then you have affiliated nexus. Oftentimes I see this where a parent entity has a subsidiary and they provide shared services for one another. This creates physical nexus. Certainly you don't have to be related entities. It could be an independent third party providing services. I see this a lot with sales activities. Lastly, we have the marketplace nexus, and this is where the facilitator has a platform for various sellers to sell their products. And so to the extent that marketplace facilitators have nexus in that jurisdiction, they are required to collect and remit and, of course, register in the state. I wanted to clarify, before I get to the next slide, I wanted to clarify that oftentimes people think that because their revenue may not be taxable, why they have nexus. And so nexus and taxability are two different concepts. And so you could have nexus in the state, but you'd be filing a zero tax due return because either the products or services are not taxable by law, or maybe the buyers have provided you with an exempt certificate. So it is possible that you may have nexus, but you'd be filing a zero tax due return. With this next couple of slides, I wanted to kind of show you the variations. Here is a slide showing you all the different nexus activities in terms of the thresholds and or transaction counts. So as you can see here, there's 47 jurisdictions, including the Alaska locals and District of Columbia, that have economic nexus laws. And then here in this slide, it shows you what is counted towards the threshold. So you can see mostly it's orange. That is where exempt sales are included in the gross threshold for economic nexus. So with all the different nexus laws and thresholds, how do you determine if and when the nexus has been triggered, and what is your tax exposure? And so this is what we have provided at Avalara, is a sales tax risk assessment. And certainly this is something that could be done internally on your own or through a third party, or if you want to engage Avalara. So the first thing that we do is we gather information and data. We normally go back 5 years in looking at your exposure to identify if nexus was triggered and when was it triggered. We then quantify that exposure with interest and penalties based on worst and best case scenario. Best case scenario is if you did the voluntary disclosure, which we'll talk about in the next slide, or does it make sense just to register? Maybe perhaps you had triggered nexus a few months ago, so you don't have a lot of back liability, so it makes sense just to register going forward. Lastly, once you've identified where you have nexus, don't forget about those states that you currently do not have nexus. You continue to monitor those going forward as to whether or not you have breached either physical or economic nexus. So the good news is Avalara is providing a free complimentary sales tax risk assessment. And this is a self-guided exercise. It's very high level, cursory view of Nexus, and provides a 12-month estimated tax liability. So there's a QR code that you can see on the screen if you want to access that free assessment. Alternatively, if you're looking for more of an in-depth comprehensive analysis, we do offer a premium sales tax risk assessment. You answer a series of Nexus questions and provide 5 years worth of transaction level data. And we will then provide a report and as well as an Excel document that identifies if and when Nexus was breached and quantify what that exposure is for multiple years for 47 states. The exposure will show you worst case and best case scenario. As I mentioned in the last slide, there is a fee associated with this premium sales tax risk assessment. So voluntary disclosure programs. Now that the Nexus study is done and a tax exposure is quantified, what are next steps? Every state in the US has a voluntary disclosure program. There are some states that call it a different name, like a managed audit, but substantively, they're still the same in terms of providing benefits, which are two primary benefits. Penalty abatement. Penalties do range from 10 to 50%. As I mentioned earlier, I'm in Washington State. Washington's penalty is 39% of the tax due. In a voluntary disclosure, interest is normally not waived in a voluntary disclosure. I think there's just a few states, I think New Mexico and Texas, that will also waive interest as well as penalties, but most states will not waive interest in a voluntary disclosure. The other benefit of the voluntary disclosure is the statute of limitations. Most states, the look back for the voluntary disclosure is 3 to 4 years. There's a handful of states that will go back even further under the voluntary disclosure. Whereas if the states contact the unregistered taxpayer, they can go back as far as indefinitely to when Nexus is first triggered. And obviously you don't want that. So the key to a voluntary disclosure to qualify is that you are not registered and you have not been contacted by the taxing authorities, because those are the two key things. If you're already registered and you have been contacted, the voluntary disclosure program no longer is available. And then in certain states, if you collected tax in advance of registration, those states will not allow a voluntary disclosure. If you need assistance with the voluntary disclosure program, this is a service that is offered by Avalara. So just reach out to someone at Avalara for more information. So audit triggers. So what are you doing that's leaving a footprint for the taxing authorities to come find you? So obviously the first thing that you see is a Nexus questionnaire on your desk. That is kind of like the first thing that kind of leads into, unfortunately, an audit. Those Nexus questionnaires is what I call kind of a fishing expedition. It's these open-ended questions about your business activity in the state, including, you know, if you have people traveling, just as I mentioned in physical Nexus slide, also asking about your income, your revenue in that state. In Washington, the Nexus questionnaire is 5 pages long. It is pretty lengthy. And so again, that's kind of first inquiry is a Nexus questionnaire to see whether or not you have Nexus in the state. Other ways that the states come find you is that if you're paying other types of taxes in the state. So if you have payroll tax, property tax, you're paying like income tax or franchise taxes in the state, there is information sharing among the taxing authorities. And so obviously if you have payroll tax, you have physical Nexus, but if you're not registered for sales tax, then of course, again, they will send you a Nexus questionnaire inquiring about your business as to why you're not registered in the state. The other thing is trickle down, meaning that if you're selling to other businesses, those businesses may get audited. And so when you get audited, they look at 2 things, what you're selling as well as what you're buying. And so, of course, when they're buying, they come across your invoice and the product is taxable, but there's no sales tax on there. So with technology, they can just take a snapshot of that invoice. And the next thing you know, you are contacted for audits. And so that's one way of getting tax discovery. The other thing is public information. And the best part of this is that it's free, right? So you have social media, the internet. Let's say, for example, I'm going on vacation. I'm interested in getting a sundress and some sandals. I get on the internet, you type in sundress, and all of a sudden you have all these remote sellers selling sundresses. So guess what? That's what the taxing authorities do as well. Also trade shows, they're, the convention centers, they also publicize and market all these events, who are all the sponsors, who are the participants that have booths there at the trade shows. And when I was in consulting, and most of the times people coming into the state, that's where the taxing authorities get that information, because you're physically in the state when you're at the trade shows. Seller websites. When you go to the website, at the very bottom band, there is information, a lot of times like events where the seller is going to a trade show. Also, they have partners or how to earn extra money as to if you want to be an influencer, right? I talked about click-through Nexus in an earlier slide. So guess what? That creates physical Nexus. And then lastly, marketplace. This is not for them to get you into trouble, but a lot of marketplace facilitators do advertise all their sellers on their website. And of course, you're probably thinking, well, gee, with marketplace facilitators, they're the ones collecting the tax. It's not about the tax. It's also the e-commerce websites the sellers also have that they may not have registered and start collecting tax on that part of the revenue stream. And then lastly, taxing authorities do generate reports based on specific standard industrial codes, the SIC code, based on certain industries like manufacturing, or they're selling clothing, things like that. And so they would do kind of a campaign in auditing that certain industry. Oops, sorry. Audit best practices. So going through my years of experience in consulting prior to joining Avalara, I just kind of put down some laundry list of things that kind of help me navigate through an audit situation. The first thing, obviously, is if you get a notice, do not ignore those notices. Whenever I have someone tell me, oh yeah, I've got the second notice and I haven't had time to respond, I have seen worst case in a situation where one of my former clients, they were flagged for audit. That was never, they never responded to that. So then the state issued a jeopardy assessment, an estimated tax due. That was ignored. And so then the assessment was issued. It was not paid. It went through collections, and it finally made its way to the courts, where the state taxing authorities filed a lien on their assets. That controller had left the company. It wasn't until the vice president of finance was processing payroll that he discovered that all the cash that was in their account has been taken out by the taxing authority. And so it was about $800,000 of monies, and they would have taken more if they had more cash, but unfortunately it was a lot of money. It took me about 2 years to get that money back. At the end of the day, they owed about $80,000 of tax, but most of that was penalties because of the accumulation of penalties for non-compliance. Then you had the collections, and then going final lien. So again, do not ignore those notices. They will not go away. When you do get audited, schedule a kickoff call. Find out, do you really need 5 years worth of bank statements, or do you need to provide them with samples? Also, making sure the auditor understands your business. You might think that you're providing web hosting services, but the auditor thinks that you're selling software. So those are very big difference in terms of taxability. And also understanding your business in a jurisdiction. You may be a manufacturer in California, but you're not a manufacturer in Washington. And so those distinctions are important due to taxability. So make sure that's clear. Oftentimes I get people telling me, well, you know what, I have liability this year, but if I wait 3 or 4 years, that will roll off and expire, so I don't have to worry about that. Well, if you're not compliant with your taxing compliance, you're not registered, well, guess what? The statute of limitations doesn't apply. So you don't have that benefit. I'm going to skip around because I know that we're kind of short for time, but I think that on the left side, the one thing I really want to focus on too is that being respectful to the auditor. I mean, you don't have to be their best friend, but just being respectful, and because that kind of goes a long way, especially when there's decisions being made that the auditor's discretion, maybe perhaps giving some extra time to gather those certificates, or maybe instead of looking at all your bank statements, they're willing to look at samples of certificates. So things like that, where you have some flexibility. Again, I think it goes a long way just to build that positive rapport. On the right side here, I mean, getting audited, get everything in writing. I know this is kind of common sense, but even when you're on a call, just follow up with an email to say, hey, here are the deadlines, here are my to-dos, making sure everyone's on the same page. When you do get an audit done, it's, they gather the facts and they prepare draft schedules. Make sure you have a chance to look at those draft schedules, that they're not finalized and sent for processing, because you do need that time and chance to go back and gather more documents or facts, because once it's finalized, it's in the system, it's going to take that much more to get that off the books. Filing an appeal, certainly every state does provide appeal process. Understanding the timing of that, understand what if you need to pay the assessment before you can file an appeal, all that is really important. Nothing is final. What I mean by that is sometimes you get an audit that says, oh yeah, there's no change, everything looks great. And the next thing you know, the audit gets processed and the supervisor takes a look at it, and all of a sudden the supervisor has all these questions, and now it comes back down for a second set of eyes. And so I always tell people, yeah, that's an estimate, that there may not be an adjustment, but let's just wait until everything's all finalized. I did have a situation years ago where we had asked for a tax refund, and a couple of years later, the taxing authorities came back and said, you know what, we changed our mind. And they wanted the money, the tax back plus interest. Yes, they can do that because it was within the statute of limitations. Lastly, on this slide, a common question I get asked is, if I get audited, should I go at it alone, or should I hire a tax expert and a tax advisor? My comment on that is just depends on your comfort level, as well as what are some of the issues and concerns that are happening. I always advise people to do kind of a self-audit, making sure that, hey, are there gaps in the amount of revenue that's been reported? Are there gray areas in terms of what is it you're selling? And certainly, yeah, but just managing your risk. Hiring a tax expert, doing that myself as a tax advisor, it's not cheap. And so understanding the value that you do bring, understand that when you do hire a tax expert, make sure that they have expertise in that jurisdiction. You probably don't want to hire someone, let's say in California, to defend an issue in New York unless they have relevant experience in New York. Also ask the question, hey, what's the possibility of us succeeding in this position? Because at the end of the day, you don't want to be paying the tax as well as paying the tax expert, right? So that's kind of out of pocket. But at the same token, I don't think there's a lot of guarantees in terms of what the outcome may be. So areas of common non-compliance here, I'm just going to go really quick because I know that we're kind of pressed for time, is that, of course, if you're not audited in your tax, then you have that as the biggest recovery. Also, the taxability of what is you're selling. You think you're web hosting, but in fact, you're actually selling, software. That is the big recovery for the taxing authorities. Here is exempt certificates, making sure that they're valid. I always tell people, make sure those are valid certificates. Sometimes they're not signed, or it's expired, or the dates don't match, or the name is not the same. Those are reasons why the taxing authorities will deny those certificates. And making sure they are certificates. They are not, their incorporation papers or an email that says that they're exempt. It has to make sure that they're exempt, valid certificates. Consequences of non-compliance. Here, I just kind of, I'm just going to skip around only because I'm short of time here, is that I get this asked a lot, what is the worst thing that could happen? That is, if you're less than compliant. And certainly, as I mentioned earlier, the statute of limitations doesn't apply. Also, the responsible person rules. This has come about in the last couple of years, where the states can go after the individuals personally for the tax that has not been collected, as well as tax that has been collected and not remitted. And it's not just the ownership or the executive team. It could be the office manager or the person that's signing those returns. So they will hold those individuals personally responsible for the tax. Also, if you're thinking about selling the company in a due diligence or going public, this will come up in their findings. Also, with outstanding sales tax, interest, and penalties, they will continue to accrue. And certainly, if you have outside financial auditors coming in, they may want to book an accrual for the sales tax for the contingencies. And certainly if the company is owned by a private equity, if they have a board, they have investors, they want to protect their interest. And lastly, on this is where the seller, because they're not compliant, they don't have a resale certificate. And so then the suppliers that they're buying their products from, they are charging them tax. And then certainly if you get audited, then the taxing authorities will then impose tax on you as a seller. And so you get kind of whipsawed on that situation. So in conclusion, sales tax is very complicated. It's constantly changing. Certainly look for a partner like Avalara who can help you navigate through your U.S. sales tax nexus and obligations. I'll turn this next slide over to Rob.
Hello, everybody. Rob Hebrank. Been with Avalara 4 years, and before that, 10 years at UPS. So just wanted to take some time out. As you're all aware, the tariffs are constantly in the news and they're ever changing. So I wanted to just have a few slides and share how we could help. Next slide. Here are some of the main pain points that we can help for international, whether it's import or export. But think about e-commerce platforms. We can help with a landed cost so that international buyers are now terrified of tariffs, and so they abandon the carts. Products stuck in customs. There could be a lot of reasons why things get held. One of the big ones is when you have poor descriptions and you're not using the correct harmonized tariff codes. That leads to a lot of holds. And so it's because they're either not using HS codes or completely wrong ones. So we can help classify your database full of tariff codes and clean those up and make sure they're accurate, as they're different for every country. Ultimately, everybody wants to know what's the duty exposure. And so people want to know when they buy something, what are those costs going to be when it comes to landing it, whether it's a B2B transaction or B2C. And so we have some solutions geared to showing the duties of that import. Next slide. I like this slide here because this really highlights how Avalara can help businesses with global compliance. On the left-hand side, sales and use tax, exempt sales. That's this blue box here. Well, internationally, a lot of times you'll need a duty and tax calculation. So we have the ability to turn our tax engine into a landed cost engine, which includes duty calculations. Middle tier there in the blue, Avalara Tax Research, understanding that things have different taxability in different states can often be challenging. Some solution here on the international side of things is our tariff code classification product, where we can help generate accurate tariff codes for you for shipping all around the world. Think of the word harmonized tariff code is misleading because it's actually specific 10-digit code for each importing nation. On the bottom left, filings and returns. So paying and remitting those filings for sales tax is a nightmare because you'd have to deal with it at the city, state, and county levels. We have international products where maybe you want to store goods in another country. Maybe you've done so much business in that country that you have to get registered, very similar to how a state would work. And so we have a team in our Brighton, UK office where we can help talk about what kind of exposure you have internationally, and if you need it, help get you registered. Next slide. Here is what I like to call our easy buttons, but these are our pre-built connectors that can currently support a landed cost, a duty and tax calculation, BigCommerce, Adobe, formerly Magento, WooCommerce, QuickBooks Desktop, all our Salesforce products, NetSuite, Microsoft ERP connectors as well. And just recently, we have a Shopify connector that can support a duty and tax calculation for your international buyers. We use HS codes to properly calculate the tariffs. And we also have a restrictions engine available through API. And of course, all of this product can be developed in-house and used for specific use cases. Next slide. Here's what I wanted to just take a minute and explain why tariff codes are so complex and why it matters. So in this example here, we have a woman's footwear, and that's 6405.90. That's the harmonized part. So that's when everyone thinks, wow, we got a nice harmonized code to do global business. But what you can see below is 3 countries. You see the harmonized part, but there's 4 additional digits. Japan is 1 off here. It can be occasionally 9. It's just about always 10. And those duty rates vary by country. So until recently, before we were tariffing countries just at a country level, these still exist. These items are specifically targeted in every country, and they use this to protect their industries. What do I mean by that? Look at Japan. So clearly they have a higher tariff, and it's more restrictive to sell sandals in their country. They probably have some market, some manufacturers there that they're protecting, compared to Australia, where they basically bring it in for 5%. Next slide. And so what we've been seeing a lot of is now on the B2B import side, understanding that we import a lot of raw goods as well as finished goods. And so we have a tool, it's called our self-serve classification tool. I like to call it a source of truth. And what I mean by that is, as these new duties are implemented at a country level and they change and they're increased and rolled back, it's like the ocean waves here. We keep it updated, but we have the ability to, this tool allows you to build an HS code 10 by through text, or if you already have a 10 digits, say for example below one of these and highlighted in blue, what we're able to do is, what matters now is of course where you're importing it to, but where is the country manufactured? So what I mean by that is, now when there's a special tariff on Chinese goods, and it can be going up here very shortly to 100% duties, and it might be 25% if it was made in Canada. It doesn't necessarily matter where it's shipped from, it's where the product is manufactured. And so in this example here of tin plate coming to the US, we can see all the I'm pretty sure this was set for China in this example, but you can see that typically of this tin plate here, the first 732690 1000 of tin plate, that's a duty-free good. But you can see, based on the country where it's coming from, we can see all these different extra tariffs. So there's a 25% there. That was from Trump's first term. That never went away in Biden's. Then recently he added 20% when he put the new tariffs on Mexico and Canada. And then you can see there's a recent one when he rolled out more country-specific tariffs. So you can see here effectively you're looking at 70% tariffs on this. This is hard to keep track of on a day-to-day basis. What's coming, what's going. So this is a good source of truth that you can use potentially, even if you were looking for alternative sourcing places. This would be a tool where you could do that for research. Next slide. So from cross-border, we have the ability to calculate duties and taxes, help create HS codes, and help you stay up to date on all those tariff changes. I'll pass this off to why you need Avalara.
Have to come off mute, forget that part. So thanks, Rob. So as you can see, compliance is tough and kind of always changing, and just keeping up with is very time consuming, let alone making sure you're compliant. But there is help out there, and we'll show you how here on this next slide. So next slide, please, Mary. And if you don't mind, can you go ahead and just roll through all the automation and go to where all the boxes are up? I think maybe one more. Perfect. Awesome. So this is a graphic of our core products and services that we have at Avalara, which are the foundation for ensuring your business is tax compliant. From every sale to a customer that you make to every purchase that you make from a vendor. So up here at the top, we have our core offerings listed. We start with your tax calculations. You can cover that with our AvaTax product. Mary showed you and talked a little bit about the exempt form process. We can take care of that process for you and automate that with our exemption certificate management tool. And then our managed returns product will automate the returns and reporting process for your businesses. And then where required, we're also able to take care of e-invoicing and live reporting needs. Excuse me. And then supporting these fundamental activities around the sale, Avalara also offers supporting products ranging from getting properly licensed and registered for sales tax, which that's our licenses and registrations offering, to tax research and taxability. That's our tax research product. To the assignment of HS codes, that's the item classifications that Rob just spoke on. And then the calculations of duties and taxes, which is our cross-border products. So everything in that first row, the orange boxes, and everything in that second row, the solid blue boxes that I've just outlined, is transactional and attaches to an order to cash process. Now you'll notice the 1099 and W-9 box is striped blue. And that's because these relate to the other solid blue boxes, because for a business to start selling, it needs to determine the vendors who need to provide it with W-9s for the businesses to issue 1099s later on for tax reporting purposes. And you'll notice that the property tax is green, and this is because it's a recurring tax on assets. It's not part of the transactional story and doesn't necessarily facilitate sales or purchases per se. However, the business needs this to be compliant. Now on to the purchasing side. A business is making purchases from a vendor, and the product that facilitates this calculations on taxes on those purchases is our AvaTax for accounts payable. This is our use tax functionality. And then instead of receiving certificates, a business is sending certificates to the vendor to make sure it doesn't pay tax on transactions that it should not. Then all of that data goes on to the return. Now, all of this is happening across a broad spectrum of omni-channel powered integrations, from your ERP, CRMs, e-commerce channels, marketplaces, point of sale, you name it. Avalara is integrating into all of these systems on a global basis to make sure we're able to provide these solutions across different channels that you need. And then the final layer is Avalara's services and programs. We can help determine if you're in compliance, and we also have sales tax assessments, implementation support, and training services for all these products. These can all be used to perform the activities that I just described for all of your sales and purchases. And some of our products have an added benefit where you'll see notated with an M as being things that we offer as managed services, where we operate our own technology and perform the same types of services for our clients. Next slide, please. And we can help you specifically as we can seamlessly integrate our solutions onto most of the N4 platforms that you're all utilizing, plus 1,200 other pre-built integrations across various platforms. Again, ERP, CRMs, e-com channels, whatever you're using will typically have. It's hard to find an integration that we don't have to provide you these solutions. Next slide. Now, if you would like to learn more on how we can help learn a little bit more about our solutions, please feel free to reach out to me directly. I'm happy to connect you with the proper resources to start those conversations. And you're more than welcome to scan the code here on the screen as well.
Okay, so I'm going to throw this out to the team, and whoever is comfortable with answering it, Mary, Jesse, or Rob, feel free to answer it. But this person is saying, let's see. Do I need to change anything in my ERP to use Avalara? Jesse, Rob, Mary, would one of you like to take that question?
I'll take it. So typically, no, you should not have to change anything in your ERP. If we have a pre-built integration, we can seamlessly connect. And then for the kind of the off ERPs that we do not have a pre-built integration, we're typically able to connect via our API. Not sure if that's what you're looking for, but we're not looking for you to change anything within your ERP.
Perfect. And if they don't have a staff member to do this internally on their team, is there like an outsourced option to help implement?
Can you repeat that one, please?
Yeah, so I think the question is, if they don't have a staff member that can help them kind of implement this internally, is there an outsourced option that can help them integrate this with their ERP system, or what would be kind of a good option moving from there?
Yeah, so we offer packages that where we're able to implement our solutions, and in some cases, we're able to lean on some of our certified implementation partners to assist with the work to get everything up and running with Avalara onto your ERP.